All right. Welcome to another trade analysis for 10:26. It's about 10 p.m. Central Standard Time. This is your host, Trade with Tayyib. We'll be taking a look at some of the commodities, crypto, and align it with fundamentals to see how we can anticipate the following week's moves. So let's go ahead and jump right into it. I will also talk about one of the trades that I've taken on crypto last week with the group, and some of the guys that are holding, some just took profit on certain percentages. What we're looking at right now is gold. If we take a look at on a daily time frame, this is something that analysis that I was doing here. What you see on green candles, this is something that I was anticipating how the price could move. So on the first green candle, we did see some bullish movement, but the next candle didn't break above the previous candle's high to continue to push up and fill this range. We actually just consolidated. So this trade would have triggered around at this point. I would be interested at buying at this point once this candle was pushing up, right? So let me go ahead and remove all the drawings so we can do a proper analysis. On the weekly time frame, as the FOMC is coming up as well, I do believe that Trump is going to be the savior of the day. He likes to cause headlines and then continue with the guy who saves the world, right? So he's probably gonna have some of the tariffs and just overall, the geopolitical risks just paused, minimized just for now, because that's the kind of person he is. He's gonna cause a lot of issues, and he's gonna make it to be that he's saving the day. So nonetheless, we are moving down on daily time frame on gold. Let's just identify some of the zones. See, let me explain to you. When we're looking at something like this, there's a lot of wicks for last few days, almost last whole week. There's a lot of wicks. So at that point, what are the zones? What as a trader should you look for as for technical analysis? Is once there is not a confirmed um, bias on a higher time frame, you should be able to go down to a lower time frame. Let's say, for example, we're going on 4-hour time frame. We can now identify that there's a resistance area around this, so this price, and then there we can identify a support down all the way below. Now, this is a big range for gold. So what I could do is I could go down and into lower time frames in the New York session or volume session whenever there is volume in the market, and I can anticipate buys and sells based on this range here. But overall until we break above or close below this range, we are stuck in a consolidation. This is usual for price to do once there's a big move that happens. After a big move is just chop, it's sideways, but this consolidation here is almost what, 1200 pips. 1200 pips meaning it's $120, which is a lot for gold, and as a day trader that's more than enough. So overall, the bias on gold, I do think, as I was talking about FOMC and then the geopolitical risk being minimized just for time being, that could push gold to further down and breaking below these current lows. So that will be something that I'll be looking forward to. And then just like, on hourly time frame or 30-minute, we can identify, like, I could show you how I usually do some analysis here. We could identify support and resistance. Break above this resistance here, we have clean traffic all the way up to 4114, and break below this area, we have clean traffic all the way down to 4028, right? With volume, we could take out these lows. We don't have to worry about all traffic on the left hand side unless there is no volume. Then you should consider looking at, hey, what are these zones, right? So let me go back to the weekly. Let's go ahead and jump right into crypto, starting out with Bitcoin. We are starting out strong for the end of this month. This was one of the support areas. I don't think I need to remove any drawings because we're still in this area of 107 all the way up to 126. Sort of like a consolidation since early July. Yeah, since early July, we have been stuck in this range. What we can say here, looking at the weekly, is that we have respected this support once and twice. At this point, we should continue to go up to to the highs, because on the left hand side there is clean traffic, and depending on how we react at the all-time highs, based on that we'll be able to continue to have our bias. Either we should continue to push up or not, based on either it breaks above or breaks below. So at this point, just like how explained in gold, we are consolidating, and once you're in consolidation you can trade within, which I'll show you here in a bit how I took the trade. But until we get out of consolidation, either break above, break below, we won't be able to say, oh, it's bullish or it's bearish, right? But monthly, we're coming up. We had the support. We didn't break. We broke below, but we didn't close, and we're starting to push up. So if we could have this close where this candle closes around 118,000, that will mean that on a monthly basis we're closing above this area. So this current candle closes around $119,000. So the next candle could continue to push up, and that will drive Bitcoin to all-time new highs. All right. So as of right now, it does look bullish. Even if we go take a look at further out 3 months, there is no sign of bearish momentum just yet. There is no close of candle that identifies that Bitcoin and overall crypto is going to go down. So I am still bullish on Bitcoin until it proves otherwise, until we close below 105 on let me see, on a monthly, which is going to be end of this month. So unless we close below 105 by the end of this month, I am bullish on Bitcoin. Let's take a look at Ethereum. So this is something that I was looking at last week, that we created this resistance area on the left hand side around 3,800. Now what happened is that we rejected once, price rejected twice, and the third time when it's going up, it has closed above, and the next candle, so the next candle didn't close below this range. That would be a fake out if it did. So this red candle that you see here, it didn't close below 3,600. It actually respected, and then this month's candle, it came all the way down, but it didn't close below back in the same ranges. If this month's candle or the previous month's candle closed in this range here, in this range, sorry, let me bring this down. So it's like somewhere here, then I would anticipate for the next candle to continue to push down and back in this range. But that didn't happen. We were still respecting the previous resistance of Ethereum, which means that it goes with our bias of Bitcoin, that we should still continue to push up until if we see this candle comes back and closes below the range of 3,600, which will be by the end of this month. I don't anticipate for it to happen. So hence, I think we are looking good, especially, closing a very strong bullish on a weekly structure, already breaking above the previous candle's high. I do think we should be able to continue to push up to at least 4,300 and then continue to push further in the upcoming weeks, which will be the month, right? So bullish there. Now let's take a look at Doge. Similar thing. I mean, crypto is usually, like once I explain Bitcoin, everything else kind of just follows for you to, whoever is, listening, you'll be able to identify, okay, Bitcoin is moving this way. Then we can see, okay, the rest of the price action for these pairs, cryptos should move in a certain way as well. That is similar to Bitcoin. So if we take a look here, on a monthly, on Doge, it's still red. That's the only concern that I have for Doge, that unless we push up this week and close above 23 cents, it's closing bearish. As a trader, I'm not in the business of anticipating moves on how I would want the price to go. I'm in business to look at it and identify where the price is going without my emotions. Market doesn't give a fuck about your emotions. It's what you see here, how you trade. You want it to be a bullish pattern or whatever. If it's not, don't push it. It's just whatever market is giving you, that's what you trade. I mean, only good thing about Doge is that there's 3-month candle, which I know I'm going way out there, but just anticipating for price to continue to push up as the previous candle was bullish, and then we could have something like this, right? Actually, I would anticipate, let's say, even if we go break above, we have something like this. Like, this is the current candle I'm talking about. This candle, red candle, if it closes above in the next 3 months, let's say like this, the next candle I would anticipate for it to continue to push up. The reason why I'm doing this on 3 month, because right now the monthly doesn't look that good. It's just it's a mean candle. The good thing here is that this week we are closing, respecting this support. So which means that if you think about this, look at this as one big consolidation, right? So we went up, came down, we went up, came down again. We didn't close below the 19 cent area. We went all the way down, but it didn't close below that area, which means that there's a rejections here, and then we should be able to continue to push up to test these highs of this consolidation, right? Okay, Link, perfect. Let's go ahead and take a look at Link. We're at 11 minutes and 30 seconds. So same thing on Link. Let me go ahead and just remove some of these drawings here. Let's take a look at monthly. Yeah, monthly. See, yeah, some of these cryptos, monthly is looking mean. It's monthly is looking like something. It's gonna have a, let's say if it closes like this, the next candle is probably gonna continue back down to this area. So unless, yeah. This, if this price action continues to stay the way it is, we are more than likely to come down and test these lows. I'm just saying. It's just what it looks like. And then maybe we could have a rejection here and then continue to push up, but up until it closes red, I wouldn't feel really comfortable. With that being said, since it's towards the end of the month and we are closing bullish on a weekly time frame, what I did do here is, with the team, we're actually playing cricket that night. I looked at the price and it was where I wanted it to be, so I went ahead and took a buy. Exactly, I'll show you, and then I will do some analysis to see if I'm gonna continue to be in that position or not. So it was like, ooh, right here. Yep. And my stop loss was around like 1.8% of my account. And realistically, I'll be honest with you, I am going for these highs up here, because the reason being, all right, let's go ahead and get into it. And last thing before we get into it, my actual stop loss was right here. So let me adjust this. I sent this to the group chat, but my actual stop loss was below this. So I forgot to really adjust it, honestly. My actual stop loss was below these highs, because once we're breaking below these highs, we're not in a bullish structure anymore, right? So let's just go ahead and get into it and take a look, right? The reason why that I have this target here as my TP, at least the short term, is because we're going in an uptrend right now. In order for us to go uptrend, we have identified, let me zoom in here. We have identified this as some sort of resistance. If we can break above this resistance, we should be able to continue to push to these highs, and that will make the price action in a bullish formation. So we'll be in an uptrend. If we close bearish right here, we rejected this, then it's not something that should happen if we're in an uptrend. So I do believe we are in an uptrend in the short term at least, which will allow us to break above these areas and continue to push up. And since it's the beginning of the week, this is something very important. I should have said this earlier in the analysis. Since we're in the beginning of this week, if the candlesticks are forming bullish patterns, which means if we're in an uptrend, usually by the first and second day of the week, we have some of the major moves that happens in the market, which allows the price to continue in that direction. And then there's sometimes retracement, and then towards the end of the month, we start go back in that direction. So towards the first few days of the week is where you'll see even last week we had big moves, we had more volume. So even today, let's take a look, right? It's been what, how many hours? Like maybe 2-3 hours, and we've already moved up 2.6%. So without, like this is just real time example. Another I another item that I noticed, and this is something a real time example, real life example I'll give you, is that let me remove this. It's just too much colors. And let me remove this for now. So I want you to just focus on this area right here. Coordinates, visibility, style, extend, don't extend. So I want you to just notice this area. What happens is that because I know it's the beginning of the week, there's going to be more volume. We are breaking above an area. As the price was breaking above on this 1 hour candle, this candle was forming after a bearish. I had to look on the left hand side and identify what is the structure on the left hand side. What you'll see here, what you'll notice that around this area, the price action is just clean traffic. When I say clean traffic, there's no chop, like there's no wicks. It's just clean traffic. So I know if this candle right here, the middle one, if this candle continues to push up, break above this area, we will at least be able to push up to 18.903. That is what you call break and close above an area with volume. Next candle breaking above the previous candle's wick. 3 confirmations and you should be able to continue to push up. This is exactly what happened. They're clean candles. Now there is more chop, like it's just too much chop here. I am willing to stay in this trade just for now because I'm going, long term, at least on the weekly time frame. I do believe that we should be able to continue to push up to 20.166. With that being said, I will wrap up this video. We're at 17.3. Oh, yeah, it's too much yap. Too much yap. Let's just, before we wrap up this video, I'm gonna go ahead and take a look at some of the fundamentals. And so Monday we're good. Yeah, we're okay. Tuesday, not much going on. Wednesday, yep. FOMC is on Wednesday. So Wednesday is going to be a lot of volume. We might see reversals. We might see continuations. I will talk more about FOMC and what to look for and how you can trade in the live streams. Also, I need to make sure that I'm doing live streams consistently. That's something that's on me. And Friday we should be okay. So yeah, that's that. All right, with that, I'll see you tomorrow in the live stream. Take care.